Well, as expected, Nvidia earnings smash. The question is, will the smash last? Hopefully we can hang in there and make them last. That's going to be the big question. It's not going to be a question about, is Nvidia going to beat? We know Nvidia is going to beat. It's always a matter of how much are they going to beat by, and is that going to be enough to keep people attached to this market? The hope is yes. So far in the post-market, we've already rejected the 298.60 line. We do have a nice 4.6% pump here in the afters on great earnings. We're going to go through the earnings in just a moment. Do know that the entire ecosystem is pumping on this. Palantir gets a shout out on the ontology product. Great move up here. You've got CoreWeave moving up to the 79.27 line, up 7%. We got Bitcoin also trying to recover here, back over 90,000. Ethereum bounces literally right on my 28.75 line. Let's see if it can hold up. Tomorrow morning is going to be critical because we don't want to get Jack in the Box. We don't want to get grindered. Both of these are not doing too hot right now, okay? Because the CEO's over at Grindr getting margin called. Not good. Well, that's the opposite of what's happening at Nvidia. Because even though you had some weenies guiding really, really high to $75 billion for Q4, Nvidia guided $65 billion, 4.8% above expectations. And it is so good that people are looking for anything to poop on Nvidia for. And so they're coming over to the balance sheet. What people are doing is saying, oh my gosh, accounts receivable at Nvidia are skyrocketing. And it's true. Accounts receivable at inventory or at Nvidia are up 44% from 23 billion to 33.3 billion. However, let's be real, folks, that's only 18% of 1 quarter of revenue. So is it really a big deal that their accounts receivable, in other words, potentially bills that, haven't been paid yet to Nvidia, are going up by 10 billion? No. This is a company with over $60 billion in cash. Does it really matter that their accounts receivable are up 10.38? No, not at all. They can wait another few weeks on their revenue, and it makes zero difference to Nvidia. So this increase in accounts receivable, not a big deal. This was a very good report from Nvidia. This idea that inventories are up up to 19.7 billion. This was a little surprising. Usually when you do see inventories go up at the chip plays, it is an indicator that you're having a harder time selling your chips. Nvidia argues that this inventory buildup is because they're wanting to build out their supply chain to make sure they have enough long lead time components to actually keep providing the Blackwell product on time. That's their argument. So far, it sounds reasonable given that we are raising to a $65 billion revenue forecast for Q4, and we expect to beat that as well. So far, NVIDIA Ultra is now the leading architecture, no significant H20 sales, so basically no China here. Gross margin increasing, not a surprise, gross margin is increasing as they're sort of buttering out their scaling costs for Blackwell. So this is positive. Now, something that you also heard Jensen say, which I thought was really interesting, was that the number of customers coming to NVIDIA after looking at alternatives is actually going up. Now, that's a big deal because a lot of people are looking at Google and they're like, oh my gosh, Google has built out their Gemini 3 product on the back of the Tensor processing unit, not NVIDIA chips. Oh my gosh, that's bearish NVIDIA, right? Well, NVIDIA is basically countering that and saying, nah, we're fine, don't worry, plenty of people are still coming to NVIDIA. Now, NVIDIA is also countering Michael Burry. They basically stopped short of saying Michael Burry's name, but they literally said, quote, our ecosystems extend useful lives. We have A100 chips from 6 years ago that are still running at 100% utilization. Without CUDA, yes, chips would be obsolete after 2 years. But because we're the shit and we have the best software to go with our chips rock. And they're still being used up to 100% after 6 years. Therefore, Michael Burry, go suck it. Okay, they didn't say the last part, but that's basically what they're saying. On top of that, basically giving Michael Burry the big middle finger, they're also saying, hey, we're going to ramp Rubin in the second half of 2026, which is already moving on from our Blackwell GB 200 to 300 technology to the next phase. Because we're getting to this annual ramp, kind of like an iPhone cadence, but we're not alienating the old stuff because that should continue to be utilized since we have a supply shortage. We can't print all the chips we want. It's kind of like, the plane analogy I've given in the past, that if you don't have enough supply of something, assets that usually depreciate over time, like planes, can actually go up in value over time. Kind of like how I sold my plane for a profit because supply chains are so tight. Now, chips usually depreciate even more rapidly, so yeah, it's a little bit wild to think that chips are still getting used. But we're seeing it as well, even with our house hack artificial intelligence, where we can actually put older chips to great use. I mean, the analogy that I gave when the earnings first came out was this comparison to this is just sort of in the background. This is a product or a company. Oh gosh, what am I saying? This is a house that we actually bought. And this is just sort of in the background. We have some cleaning up to do in terms of the actual visualizations on it. But in the background, we were just testing our AI, and our AI found this on its own, scored this property at an A, and we already bought the property because it was a good deal. But to us, it just reiterated that our AI is working. And this is actually in part to what Jensen is talking about. It's sort of credit to what Jensen's saying. He says what you want to see is inference usage go up. You want more people to buy Blackwell chips, us included. At House Hack, see, I got the Nvidia jacket with House Hack underneath. We're using Blackwell chips as well, not just for training our ML. But then, of course, we use cloud for inference, and we're inferencing with AI as well as we ramp our AI product. So we're very excited, and we think he's right about that. And so far, there's really nothing not to like in any of these numbers. Quick disclaimer, just so I don't get in trouble, make sure to read the offering circular at househack.com/reinvest.co. It's the same company. Read that. You can see our 5% bond offering. If the Fed panics and closes or drops rates, we'll obviously drop that as well pretty soon. But you get 5% through conversion and then all the upside in the stock. Read about that and the risks involved investing at househack.com. So anyway, going back to this, they also, where I think we're going to end up going with this artificial intelligence is you'll find that LLMs will become so good that a lot of companies, like whether it's Google or Meta or Microsoft with Copilot, they'll really start advertising a lot out of their LLMs. And you actually saw Jensen directly shout out Meta talking about their AI recommendation systems and the inference usage in advertising. I actually think you're seeing some of that over at not just Palantir, but also Pinterest as well. And Pinterest, the problem is with these companies like the consumer plays is the consumer's pretty freaking weak right now. It's like the rich companies that spend money on Blackwell chips. They can afford this kind of stuff. But if you look at Pinterest on like a week chart, look at how low this sucker is. And they're a beneficiary of the artificial intelligence advertising revolution as well. So kind of interesting to see this trend line that they're literally sitting on right now. Pretty remarkable. Now, one thing that does suck right now is you don't want to invest in a company like Fat Brands. Fat Brands is basically going bankrupt in my opinion. So a big oopsie doopsie over there. But anyway, okay, so what else do we have? Then we have, if we go look at some of our other numbers over here, we have OpenAI, 800 million weekly users. That was interesting. 1 million enterprise users. And they say gross margins at OpenAI were healthy. I thought that was kind of funny because it's like, who cares about the gross margins at OpenAI? We all care about the net margins. That's what matters. Then we have Blackwell Ultra trains 5x faster than the Hopper chips. That was kind of cool to see. We saw their expectation that gross margins are going to keep holding in the mid-70s throughout the next quarter. That's good because you're actually seeing their gross margins go up because they're scaling Blackwell. Now, AMD, it's worth remembering, only makes about 46% of their revenues from data centers, whereas Nvidia is sitting at over 89.8% of their revenue coming from data centers. It's almost all data centers. Now, I was a little disappointed that gaming was down 1% sequentially, and automotive sales were only up 1% sequentially. They were up about 33% year over year, but only up 1% quarter over quarter, from the last quarter. I was a little disappointed about that. I see Nvidia as a really good sort of like robotaxi and FSD play that is reasonably valued right now. I like the valuation of Nvidia, and I think that the valuation of Nvidia does support, frankly, a $300 price target. Now, that doesn't mean that I'm super excited or optimistic about the stock market in the near term. I think we have a lot of headwinds with jobs and recession risks and otherwise. So I've been diversifying a lot to cash. I've been taking profits on some stocks, and I send, of course, those alerts in our alpha report, which you could get at meetkevin.com. We have a coupon code Nvidia is actually the current coupon code. So coupon code NVDA is in honor of Nvidia earnings, and that is expiring today. So you could use that over at meetkevin.com. But anyway, you've got this, the other thing to, oh, that's a little funny as the coupon code phases in. I got to work on that transition. But anyway, so you've got net income. Consider this, 55.7% of Nvidia's net income goes to their bottom line after taxes. That's insane. Because remember, they're a chip designer. Now, they produced their last with TSM. They produced their first Blackwell wafer in Arizona last month. That's kind of cool. I do think a fair value for the stock is $303. I do think there are other opportunities where you could make more than 50%, by the time we hit that. But I got to give them credit. These are really good numbers. This is very large price, great pricing power, great balance sheet. Momentum's obviously very high, so not the best, but there's really no bankruptcy risk here. And the valuation is fair. It's trading for a 1.6 peg. It could easily be at a 2.6, 60 billion in cash, plenty of room to keep buying the stock. I know some people, again, are worried about the inventory aspect, so you kind of have to look at them and be like, well, do you believe them or not about what they're saying regarding inventory? Regarding, they did shout out Lowe's. I thought this was cool. They talked about how Lowe's is using CUDA to help build out their supply chain agility. I'm a big fan of Lowe's, by the way. House Hack, we are almost exclusive with Lowe's. Big fan. We have a pro contract with them, so when we put quotes in for orders, we get huge discounts with them. So we're big fans, big supporters. We've got. They talked about their Anthropic partnership. They talked about Steam, not Stream, I misspelled that. Steam breaking 42 million concurrent users, partly in the backs of Nvidia chips. Steam, by the way, dude, 42 million concurrent users at one point. You realize that's like the entire state of California playing on Steam at the same time. Do you know how much Rust we could be playing if we were all playing at the same time? That's sick. Man, I got my 5090 to play Rust, although I haven't played Rust in months. I'm a little disappointed. And I don't need a 5090 to play RuneScape. And I'm definitely not going sailing later today. Anyway, Jensen talks about sort of next iteration of getting from not only the CPU to GPU movement, but getting into agentic AI and then physical AI. This is really a shilling of robots and a shilling of agentic AI. I don't know. I'm not so convinced on agentic AI yet, but we'll see. Gemini 3 has a lot of hope. Its cost to operate is pretty high. If you look at the pro version of Gemini and then the agentic spend, this is really what you're looking at right here. We have, there it is, Gemini 3 Deep Think Preview. Its cost to operate is like 100x the cost to operate per task, Gemini Pro 3 or 3 Pro. Now, the Gemini release could really motivate other companies to spend even more on NVIDIA chips to try to catch up to Gemini, or Gemini is just going to bankrupt companies like XAI and OpenAI because Gemini is just going to eat their lunch. We don't know. It seems binary at this point. But I think the most important thing tomorrow from a strategic and trading point of view is you have to see what ends up happening with institutions. Is NVIDIA going to keep rejecting these two lines right here? The two lines that I have are 198.98 and 196.53. The lesser of the two is this one right here. We've rejected this one and we've rejected this one. So both of them today. And these lines have been here for a while. So these aren't like secret lines or whatever. You're welcome to copy them. But anyway, how the market responds tomorrow is going to be critical because, the post-market, you're not going to get institutional profit taking. The concern is what happens tomorrow morning. Is there going to be institutional profit taking at the morning? We'll go this way. We didn't see much movement this morning on Nvidia. What happens this morning? That's going to be critical. And if there's a bunch of profit taking, then the whole sector goes down with it, especially as we essentially anticipate no rate cut. We looked at the Fed minutes earlier, and they were really disappointing because you pretty much have a Fed that's like, look, if you want us to cut, we need data. We need data. Data
dependent.
And we don't have data. So, you know, overall, there's really nothing not to like in the Nvidia earnings. They're really good. They keep printing money. They're helping companies convert sales. Slow down. I didn't like the gaming or automotive revenues on a quarter-over-quarter basis, but otherwise, they're firing on all cylinders here. They're not reliant on China. The margins are strong. The net margins are the greatest I've ever seen. They basically shut down Michael Burry. They think they have $500 billion of revenue visibility through the end of 2026, which is a huge pipeline of visibility. And so really the only thing to be concerned about is basically institutions coming and saying, cool, all right, like this is the top. Let's take our money and run. But beyond that, there's nothing that Nvidia said that I think is really nerve-wracking. And so it's really just going to go back to market sentiment at this point. But broadly, I'm pretty excited about it. And, you know, I kind of feel honored that, you know, we chose NVIDIA Earnings Day to do an expiring coupon code. And the coupon code is NVDA. Remember, you could get a tax write-off before the end of the year by joining. Very likely. Talk to your CPA about that, of course. No guarantees. Every trade alert, all the 8 courses. We've got a new one coming out as well, which you will get access to that as well, totally for free, once you're a part of the Meet Kevin membership. You get every private live stream, the Alpha Report, and you'll also get a big fat discount on our House Hack AI if you join the Meet Kevin membership. So you'll get a discount on the AI. You'll be able to get it for a lot cheaper if you are part of the Meet Kevin membership, which is kind of cool. Somebody here writes UiPath for agentic AI. Dude, thanks for the $10 donation, but you have to remember that UiPath was AI before it was AI. They were trying to do process automation for you when AI was still considered deep learning and big data, right? The problem is now everybody can put together the pieces of puzzle like UiPath. So UiPath really has to prove that it is somehow better AI than like Gemini X, XAI and Copilot, and somehow better than all of the other agentic services. And so it really takes process automation and turns it into a moded product to a non-moded product. That's your big problem with UI. And I think a lot of people have hope for it, but that's as long as you are comfortable that they have a moat, maybe there's a shot for UiPath, right? But that's what you have to look at there. So somebody here says, nothing is good and perfect. I don't know what you're saying. And then I talked about the competitors, right? Yeah, we talked about the competitors, how they're seeing competitors to NVIDIA or customers who are looking at competing products actually come back to NVIDIA and they're like, yeah, no. We just want the NVIDIA chips. So pretty optimistic there. Looking at some of your other comments here. Bye, kids. Be careful investing out there, says someone. Everyone is hanging on productivity gains from AI. NVIDIA shows us that. Market probably moving up now, no? I mean, I don't know that a lot of people were expecting NVIDIA to miss. Yeah, Jensen's a really good salesman. So we should have a green day tomorrow unless you get profit taking, right? All right, folks, we'll put together a plan in the Alpha Report tomorrow. Remember, if you join today, you can be part of tomorrow's Alpha Report, and we'll see you there. So thanks so much, and we'll see you in the next one. And make sure to go to househack.com to learn more about investing in HouseHack. Read the offering circular, because there's risk with free investment.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.